Good morning, this is Meir Valensky with Driving Markets. I hope you're well. Okay, so let's look at what happened yesterday in financial markets and what was driving markets yesterday and what is likely to drive markets today. So yesterday, I've got to admit, I got it completely wrong. The overnight futures yesterday opened up in the morning, and then I've sent a message out and a video out that the markets are going to end up falling. They did. They went into negative territory, which is fine. So I got that part right. However, when the markets opened in the US at 09:30, the markets jumped up significantly and ended up 1.5% up on the Dow, 1.5% up on the S&P, and nearly 2% up on the Nasdaq. So that is a major jump, and they closed up high. So therefore, I got the actual assessment wrong, convinced that the markets would close down, and that just goes to show you, on a day trader, and an opinion of the day is very, very high risk, and therefore you need to trade swings and not day trading, because day trading can just go either way, and it's very, very tough markets. So let's just go through a couple of things that happened yesterday. Let's start off with some shares at the moment. So all shares were up in the Dow. The Nike was up over 4%. You've got Google was up. You've got Salesforce was up. Apple was up. Intel was up. What else was up? Microsoft was up. So they were all up 2 to 3% yesterday, really aggressively. And a lot of investors came in to buy those stocks on the back of good, solid earnings from the corporates, and that pushed up investors' confidence to buy into shares. Even Netflix was up during the day. However, after hours, Netflix dumped 20%, dropped 20% on the back of losing subscribers to competition, and also one family taking a whole subscription as opposed to individuals, which was what happened in Corona time. So therefore it lost over 200,000 subscribers in the last 3 months, and its forecast going forward is even more negative, and therefore the shares dropped 20%. In addition to that, you have to remember the shares are already down over 42% from the beginning of the year. So Netflix has gone into significant bear territory, and you've got to keep an eye on it, because the way the forecast is looking and the way it's going forward, it's likely to fall even further, because the competition is eating away at its client base and at its database. So that's a share to watch. Other items on the agenda: the US 10-year Treasury, as I said yesterday, was at 2.92% and closed at 2.92%. That is a major significant high, because it's approaching the 3% level. If it gets to 3% or above, then you're going to see mortgage rates and interest rates shoot up dramatically, and it's going to frighten the markets. However, the yield yesterday was high, and yet investors ignored the yield on the 10-year Treasury. That just goes to show you how much enthusiasm there was and how much aggressiveness there was in going to buy out those particular stocks. What else have we got? We've got cryptos. The Bitcoin and the cryptos jumped up significantly. I'm trying to steady the phone here as I'm driving. They jumped up significantly yesterday, and as a result, investors bought into cryptos and looked at them as saying they're too low, and crypto shot up significantly. That is true if you're a bull. So if you're a bull, you're looking in the market thinking, hold on, there's stuff here that's gone down too much, let's buy into it. And if you're a bear, you're thinking it's still too high, let's hammer it down even further. And this yo-yoing backwards and forwards, where the investors don't know if we're going up or we're going down, has brought us to a range-bound market, where the market is significantly range-bound between a high and a low. So there's a high on the market. On the Dow, it's about 35,300. On the Nasdaq, it's about 15,000, and that's the high. And the low on the Nasdaq is about 13,600, and the low on the Dow is about 34,100. So the markets are range-bound at the moment, and you have to be aware of that, and therefore you could trade the range until there is a breakout. When will that breakout come? The breakout could come at any time, but likely to come on the back of rising interest rates or shock in interest rates. In other words, the market has taken into account that interest rates at the moment are going to be this year round about, according to the Fed, 3.5%. In my opinion, they're going to go to 4.5% to 5%, and I think the Fed and the other central banks have majorly undervalued the interest rate rise and where inflation is at, considering that the Russian-Ukraine war is going to continue probably for another at least 6-7 months. Putin's not going to back down. Therefore, you have to take that into account when looking at trading, and also you should be looking at swing trading to take into account the lows and take into account the highs and the intraday swings. It's very hard to trade on a daily basis, as I said earlier on. Gold traced slightly back yesterday to 1,960. However, I do expect it to go above $2,000 in the near future. Keep an eye on that, and also keep an eye on Twitter, because Elon Musk is not going to give in. This is Meir Walensky with Driving Markets. You can catch me on LinkedIn, you can catch me on YouTube, Instagram, WhatsApp, and any other social media platform, including Twitter, which I'm not a big fan of. Catch you later. Have a good day.